Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillum, Chief Analyst at Wealth Within. This week I'll be taking you through my 10-step guide to share trading. I'll also give you my views on the Ordinaries Index and this week's stocks of interest that you've asked me to look at. If you're a regular to this channel, welcome back, and if you're joining us for the first time, let me extend a big welcome to you. I'm sure you'll gain some great insights and inspiration as to how you can confidently and profitably trade the stock market. And as always, if you have any topics that you want me to cover, or you have any thoughts on this week's report, please comment below and be sure to subscribe to our channel to keep up to date. Also, before I get into the report, I want you to click that like button just below. All done? Great. So let's get into this week's report. Let me ask you, are you someone that's always wanted to get into the stock market but not really known where to start? Have you watched friends, family or work colleagues make money and wish you could have a piece of the pie too? Well, today I'm going to help you with that, as I will share with you my guide to get you trading the market and getting more profit. Now, before I get into it, let me say that it does not matter where you start, it's where you finish that counts. So even if you only have a small amount of cash to start with, you can make some wise decisions now and get your money working hard for you. When your money's working hard for you, then your bank balance gets the boost you need, not just today, but into the future. The result is that your bank balance will compound and continue to grow at an increasing rate. It just makes sense that if you make consistently wise choices about how you manage your portfolio and which stocks to invest in, that you get the opportunity to compound your returns and accelerate your wealth. Compounding your return allows you to build up a nest egg so that you have more choices in life and in your retirement. So how do you do this? Well, let me take you through my 10-step guide to trading the stock market so you succeed. The first step is really simple, and that is do your homework and don't let financial terms overwhelm you. You seriously do not need a PhD to understand how to be successful at the stock market. Now, the introduction of the internet, for the most part, has been a really big step forward for a lot of us, as it has allowed us to do things like what I'm doing now, and that is record a video and help people all around the world understand how to make money in the stock market. But the internet is also known for causing overwhelm, conflict, confusion, particularly when it comes to finding answers to life's issues like investing and wealth creation. Now, rightly or wrongly, it has become the first place people visit in order to understand many things, from health, getting stains out of almost anything, and yes, the stock market and trading. But dare I say that in my experience, this ability to get information at the speed of light from tapping a few buttons on a keyboard and doing so in your own home often causes a great deal of wasted time, angst, and frustration for those starting out in the stock market. Now, why is that? Well, quite simply, there's a lot of conflicting information and opinions about the best way to approach the stock market, and for the most part, those imparting the information on the unsuspecting public are not suitably qualified to do so. Hence the confusion. Let's face it, anyone can sit in their living room in front of a webcam and distribute content as if they are an expert. So it's important that you never lose sight of the fact that it's your money and it's your responsibility to choose where you get your information from, and do so carefully. Lastly, when surfing the web for trading information, I'm sure you found that it often results in you getting bombarded with ads about how to get rich, images of fast cars, beaches and exotic destinations in the ads and in the websites, all saying you don't need to do much to achieve your dream lifestyle. Seriously, if it was that easy, then everyone would be a multi-millionaire. Now, I'm sure you've seen these ads and websites making fairy tale promises, and just like all wise people do, you click the delete button. Again, in my experience of investing and trading both personally and professionally, and in teaching people over the past 20 years or so, surfing the web can and often does lead many down the wrong path, wasting time and money. Let me say that simply reading or watching free information on the internet is not necessarily giving you the right knowledge or education you need so that you ensure your long-term success. That said, there are some great websites that can help you understand the stock market. In particular, when studying the stock market, you'll come across a lot of fancy names and acronyms that may on the surface appear intimidating. But learning the industry jargon will help you become more informed. Now, Wikipedia is a great resource that can support you in your journey to understanding the stock market, as can your local stock exchange, as they often have some great beginners information and education. You can also register with an online broker or use financial dictionaries. Now, the more homework you do, the easier it becomes, and over time you'll start to make sense of the whole plethora of news and information out there. As William Durant put so well, education is the progressive realisation of our ignorance. After all, you don't know what you don't know. Often I talk to people who honestly believe they've learnt to trade the stock market on the web. And when we compare what they believe they've learnt and can do to what actually works and what they need to do, they find that all they got was just some basic information and that they really did not know much at all. Remember, price is what you pay, value is what you get. If you pay nothing, then you've gained something of little value to you. A good rule of thumb when it comes to learning about the stock market and doing your research is to understand that less really is more. In simple terms, do not overcomplicate the process. Therefore, I recommend that you only ever rely on information and education from quality providers that you can independently verify and quantify. Why? Because, as I mentioned, free information is not always valuable. That brings us to number 2. Go for a test drive. With the stock market, I recommend paper trading before you invest your own money. Given that your emotional well-being, or in other words your psychology, will play a significant part in your long-term success, why would you risk your money trading unless you know you can be successful, or at least have a high probability of being successful? Now, paper trading involves trading in a simulated environment where you practice buying and selling without risking your own money. By going for a test drive, you will not only be able to test yourself, but also how you go about trading and managing a portfolio so that you can prove to yourself you can do it. Trading is not about having the best buy and sell rules. A trader is someone you become and a skill you develop. It's a process, strategy, tools, techniques, knowledge and skill all rolled into you. Lastly, you have to earn the right to be successful as a trader. You don't just wake up one day and magically become a successful trader. Traders know what works best before putting their money into the market. Trading this way significantly lowers their risk, while at the same time increases their overall profitability. When paper trading, it is a good idea to select a small number of stocks to buy and sell so that you create a well-diversified portfolio that aligns to what your goals are, and to include these in a watch list so that you can observe and monitor them on a weekly basis. Now, it's recommended that you buy and sell these stocks based on your rules over 3 to 6 months to not only see how the stocks performed, but also how well you did in managing them. The beauty of paper trading is that you can get 6 months experience in a few hours rather than over 6 months. Now, paper trading proves to you that not only can you trade, but that your trading rules work. It builds confidence and competence. Given this, it's invaluable to you in your journey to become a successful trader. It is also important to consider the amount you're willing to commit to each trade and the time frame over which you're trading. This is very much part of the process I talk about, and this is one of those things that separates those who are successful from those who are not. The time frame and the amount you're willing to risk means, are you looking to trade over the short, medium, or long term? Understanding this is vital, as this will have a bearing on the stocks you select and how much you invest in them. You also need to consider how you will manage your risk when trading the stock market. as you need to ensure you do not take on too much risk and trade outside your comfort zone. Now, you can manage your risk by asking yourself, how much am I willing to lose on each trade if a stock I buy falls in value? Now, I cover this subject in more detail in my YouTube video titled, What is a Stop Loss? Understanding how to create and manage a portfolio are critical skills everyone should possess if they want to achieve success in the stock market. In my latest book, Accelerate Your Wealth, I teach a proven, low-risk approach to creating and managing portfolios, as well as some simple but powerful strategies to buy and sell that will accelerate your wealth, so that you put yourself in the driver's seat. This brings me to number 3, and that is from little things, big things grow. Now, I'm constantly asked, how much do I need to get started? Normally, this comes from somebody thinking, if I get into the market, how much do I need to make a worthwhile return? Now, to be upfront, this is not the way to think about the market. The market is a long-term plan and not a short-term get-rich-quick solution. It is a long-term process to achieve a worthwhile goal. It does not matter where you start, it's where you finish that counts. The most important point is to get started, regardless of the amount of money you have now. Leaving things until you believe you may have enough to make it worthwhile is unwise and will severely hold you back financially. In fact, delaying getting started is the biggest regret our students and graduates tell us in their feedback to us. And without exception, all of our students tell us that they had wished they had started earlier, not just with our education, but in their trading. So if you're not getting where you want, ask yourself, what is holding you back and what can you do now to change things? Now let's get back to how much money you need to get started. Some say you only require a minimum of $500 to purchase a stock. And whilst this is true, in fact, it is possible to buy just one stock for a few dollars. That said, you need to consider the cost versus the potential reward. Let me explain. When buying and selling stocks, you will pay brokerage to get in and get out of the trade. So you need to balance these costs against the potential profit on each trade. For example, if it costs you $50 with an advice broker to place a trade, this equates to 10% of your $500. Therefore, the stock needs to rise by 10% before you break even. Given this, I recommend using a minimum of $1,000 to purchase each stock, as you'll avoid brokerage fees eating away at your profits. If you only have a small amount of capital to start trading, it is recommended that you develop a saving strategy so that you can put some cash away regularly and then use this capital to build up your portfolio until you hold at least 5 stocks. Once you hold a minimum of 5 stocks, you can begin to increase the amount of shares you hold in each stock. If you sell a stock, reinvest the capital from the sale into another stock, as well as any savings you have accumulated to increase the amount you are purchasing. Gradually, your position size, or the amount of cash you initially invest in any one stock, will increase, rather than the amount of stocks you own, which will ensure you are able to manage your risk. Okay, so that's the first 3 steps. Now, rather than rushing through all 10 and not giving each the time it deserves, as they really are essential to your success in the stock market, I've decided to split this subject into parts. So you'll have to wait for the next part in a week's time. Now, some of you may be thinking that what I'm covering is overly simple and may not put a lot of weight into what I'm saying. If this is you, then you need to think about why you think like that, as many would-be traders do 2 things. The first is that they undervalue what seems simple, thinking it's of little value. And then they overvalue things that seem more complicated, as they believe that if it's complex, looks high-tech and sexy, then it must be better when it's not. The reality is that your journey to success as a trader will be as hard and long, or as easy and short as you choose to make it. What I'm sharing with you is the shortest, easiest way to success. Now let's get into this week's stocks.
Please remember that this report is an educational tool, and as such, your personal circumstances have not been considered in the analysis of the compilation of shares included. The content of this report cannot be considered personal financial advice. If you have not done so before, pause the video and read the disclaimer on screen. We hope that you enjoy this week's report.
All right, guys. This week we've had, again, a number of people emailing through and asking for me, looking for stocks and making some other comments. So this week I was able to print them out. So I'll just read through a couple of those comments for you first, and then I'll get stuck into the stocks. I can't cover every single stock that everybody wants. That's why I'm going to be starting to do those live streaming events, or Wealth Within Live, that I've been talking about for the last couple of weeks. So just watch out for those. We're going to do some test streaming Wednesday between 7 and 8 p.m. Melbourne time, or Australian Eastern Standard Daylight Savings Time, whatever you want to call it. That'll be on Wednesday. I'm going to be doing Wednesday 7 to 8 p.m. That's what I'm going to be doing. So I'm going to do a test this Wednesday and the following Wednesday, a beta version if you like, and then hopefully we'll have the technicals right to really sort of start ramping them up from the first sort of week in March from that point of view. And then I'll be able to cover a lot more stuff because I'm going to be doing an hour-long live, and we'll be able to cover a whole lot of stuff. But just want to go through a couple of things. Ramit has said, hi Dale, love the topic for this week. That was on stop losses for last week, so you nailed it. A lot of people don't have an exit strategy. I'll be looking forward to viewing the SMS series that you are planning. I have read and seen people talk about holding your position for the long term. According to them, this is a good strategy if you're planning to retire in 20 years, as you'll pay less capital gains tax or no tax closer to retirement. If you don't mind, Ramit, I'm actually going to do that on Wednesday night in my test stream, so I might actually answer that in that rather than do it here. It's a little bit more than a quick answer from that point of view, so thanks. SMSF series, we will be bringing that out. I've been chatting with my team about bringing some stuff there, talking about SMS. I do have podcast called Talking Wealth. There's an SMSF series in Talking Wealth. If you haven't seen our Talking Wealth podcast, you can go into iTunes or just type in Talking Wealth Dale Gillham and you'll find our podcast series. And there is a self-managed super fund series in there. We're just going to do it on video. Robert Russell, thanks very much. Great answer. I'm not sure exactly what the question was from last week, but thanks very much, matey. I actually think that one was the one on the election and how that's going to affect things. I think that was what it was. Deb Wallace, great question. Kim, about SMSF. So it's on my mind too. So thanks, Kim, for suggesting SMSFs. Ian S says, cool. I too am interested in self-managed super funds. So again, looks like a few of you are interested. And these are the sorts of things I'd like to hear from you, especially for our live show, because I want to bring up things like that. We might be able to do a bit of a series or sequence in those live shows for other areas that you might want information from, and Janine and I can have a chat about those, and we can bring that into those live shows. It's a little bit more, be a bit more tailored for that sort of stuff than this. This is just a market report, quick look at some stocks and keep moving on for everybody. So, cool. Ian says, I'm interested in self-managed super fund. Can't wait for your series on this. Thanks for your video. Awesome as usual. Thanks very much, Ian. Dale, I've also reread your book. I was surprised how much I missed the first time. Pretty normal. People miss things the first time. Same in our diploma course and our other courses. We always tell people to go back over the course a couple of times, because when you first go through it, you've got the hat on that you're the student, and that's really what you're doing. It's like, I'm the student, there's my hat. And then after a while, once you've got through the book or the course, you go back to the start thinking, well, now I should know what I'm doing, or I know what I'm doing, or understand what's happening in the book or the course. And now you're looking at it from a trader aspect, and that's why you pick up a hell of a lot more. So please reread it a few times, and you'll find more in it every time you read it, because there's a lot of complexity in the book that's underneath. It's a simple read, a really, really simple read, and easy as everybody's telling me, but there's got a lot of complexity behind how I put it all together, and the structure and the strategy and the trading that I've done from that point of view anyway. So yeah, reread the book, glad to read it again. I've started to trade stocks based on your trendline approach with a plan. It's really helped me with my FUD levels. I think he means funds under management, his funds he's management. I'm not sure of the term FUD. I've not heard that one before. I can mechanically apply my rules instead of getting spooked to sell. Great. That's perfect. I also love I'm now medium-term focused and don't have to watch the stock market daily. Yeah, big sin a lot of people do is watching the market daily, and they just get emotional, and that's what your emotions go up and down all day long when you watch it daily. I don't watch it daily. I don't even have live data on my screen, and most people say to me, well, how do you trade if you don't have live data on your screens and you're a professional trader, professional fund manager? And I go, I trade easier because I'm not so stressed about what's going on each day and what's happening with different stocks. And I used to have, the live data on my screen, and you see red and green and things going up and down and things flashing. And all it was like being in an arcade, where you see all these machines, or in a casino where you see all these things flashing all over the time. It was visual overload, and it's wrecks your psychology. So I stopped doing that completely, and now I don't use live data. If I want to trade, I trade. I can get a live price anytime I like. It's pretty simple from that point of view, so I don't do that anymore. So medium term, I'm looking forward to seeing my medium returns over the next 6 to 12 months versus the old way. I was trading where I made many trades over 12 months and just lost money. Keen to look at trading mentor in the near future. Great, Anne. Good. Thanks for your comments. Last one here from the comments. Hi, Dale. Thank you for your willingness and dedication to helping people help themselves. Always love listening to what you have to say. Cheers. That's from Sue Allen. So hi, Sue Allen. Thank you very much for your comments here. Let's get into the stocks for this week. So let me have a look. I'm going to bring up the first one. All right, on your screen right now is a weekly bar chart of the All Ordinaries Index here, so the XAO as it's known. Again, you can see here last week. Now, looking at last week, I did mention to everybody that I thought the banks did need a bit of time to settle down. They all came down last week. In fact, the financial sector, I think, was down just under it was a point something of a percent anyway, where you had some other really, really good sectors moving up, like some of the material sectors were actually moving up. There were some really, really good trades last week, or some good stocks moving up last week. But we did see a bit of indecision in the market, and that's what's showing on this current bar that we're seeing on a weekly basis. If we look over here at this current bar, you can see where the open is here, and it opened at 6136, closing at 6148, only 12 points, but it had a range of 71.9 points, and so in reasonable range. Shorter bar, but where the opens and closes, it did close a little bit high. And again, as I say to you, this is stuff I teach on our Trading Mentor course. It's so important to understand the bars, what they're telling you and how they're telling you, what the psychology is doing. It's not just enough just to have a few tools around support and resistance and that. And this is telling me the market is starting to look at whether it starts to fall away right at this point in time. It would not surprise me if our market was down this week. We did have a very, very big bar the week before, 247 point range, and closing up at that 6136 there. So it wouldn't surprise me if we had a 1 or 2 weeks down. I'm looking at that 5906 level. That's possible where it would come down to, but under 6,000 points, I'm thinking it'll probably come down below that. 1 to 2 weeks down, and then we can start to look at it'll start taking off. I do think the previous all-time high that was set in, I think it was October or November now, I'm trying to remember, so long ago, back in 2007, the all-time high, I do think that's going to be challenged and broken sometime this year, probably maybe more so in the second half, but depends on how much this market can get going, because obviously it's still held back a little bit by world markets. But last year, our market performed really well against world markets. I mean, I know the Dow probably performed a little bit better than our market, but most markets were down further than our Australian market, so we did quite well. But I do expect our market to be in positive territory by December. That means rather than, I think we were down about 7% last year, so I expect it to be positive territory this year. Now let's go and look at some of the stocks. So have a good look at that. I've got some stocks. William Jago, thanks William for sending a stock code in. He said, hey Dale, love your work. Thanks very much William, it's really nice to have you on the channel. What do you think of Coca-Cola Amatil, or Coca-Cola Limited, sorry? It's a fairly low price. William actually put that on the US report from last week, and it's an Australian stock, Coca-Cola Limited. I'm assuming he doesn't mean Coca-Cola America, basically what he's talking about there. But if you've got US stocks, put it on my US report, and Australian stocks on the Australian report. So let's go down to, I'll just open up my other workbook. Actually, I don't need to do that. I can just click over here and go to my other workbook that I had it all into. Save that. I'll just bring it up here in America because Coca-Cola is in America, obviously. It's an American stock. But let's go to Coca-Cola over here. Let me get rid of this little window here. Here's Coca-Cola, and as what William's actually talking about, it's had its all-time high way back over here in 2013 at $15.40. Now, currently, it's fallen very, very heavily all the way down to that low in November 2017 at $7.52. Now, if I scroll that out a little bit so you can see here, you can see how it keeps trying to get up and it pulls back. And right now it's looking very, very indecisive. I think it's probably got further to fall. I don't really think it's not showing a lot of signs of strength. And it's quite interesting looking at this weekly bar chart. You can see there's huge, big ranges in this stock. It's a trading stock. And if you're a good trader, you can make some really, really good money out of it. Because obviously, down here at $8 to $10, there's 25% movements in those over a period of a year, and that's not too bad if you're trading, but it is quite volatile. But at this point in time, I'm not super excited about that. If it doesn't get back above, let me just have a look here quickly, put a little tool on. Now, just to let you know, with this sort of stuff, what I'm doing here, obviously YouTube's free, so I'm not putting in a shed load of analysis on these stocks. I'm just looking at these as I'm seeing them and just bringing them up. I'm not showing all my other workbooks that I use for our students, and I reserve that for my students and the analysis that I'm doing, and I do really detailed analysis for our students. But obviously this YouTube, most of the people wouldn't understand what I'm getting into, and so I keep it really, really fresh and really, really light, a high level sort of stuff, because most people are beginners on this YouTube channel. So I'm just doing this just basic stuff that I can actually see. But just letting you know, if Coke can't get above $9.24 and this move up, then it's going to fall away and it'll go back below that $7.98. If it can't get up above that $8.94 in the next week or two, then I would suggest it very much will go past that $7.98. It may even challenge that. But is this a stock that I would buy today? No, I wouldn't buy into this sort of stock today. So that's my take, William. People say things that's something it's cheap. I get that a lot. People go, wow, this is cheap. It's fallen heavily. It's really cheap buy. I had that the other week with the banks. People saying the banks are cheap. But what is cheap? And if this stock falls from where it is right now down past that $7.98 and then it heads down to that $7.50 level, is it still cheap at the current price? And the answer is absolutely not. Never, ever, ever, ever buy anything that's falling away. Always buy stocks that are rising. Never buy anything that's falling. Huge sin that traders make. They go, wow, this is really cheap, I'll jump in. And they haven't confirmed it stopped falling. And one of the biggest things I teach my traders is trade on confirmation, not speculation. 99% of the stuff I get through the YouTube channel is speculation. People speculating on something happening. Hey, this is cheap, or this is doing this, or this, it's said to be doing that, or somebody may be doing a takeover, or they might be buying a mine over here, or they might be drilling here. That's all speculation to me. I only ever trade on what I know and can confirm that's actually happening, and the charts will tell me that. And so I'm looking at this at the moment thinking, yeah, it's looking okay, it's looking a little bit better, but nothing fantastic. It's not so exciting for me. Moving on to the next one, Nick Amiri. I think his surname Nick Amiri. Thanks for thanks for the great video. If you could have a look at MXYORG, thanks. I'm actually gonna look at both of those. Please, when you do your stocks, give me your stocks. Tell me why you want them. Do you own them? Do you not own them? Why are you looking at them? Because it's a process. And I'll share with you today, it doesn't matter what I say here. My opinion on some of these stocks may change tomorrow or the day after. It's what you do with them that counts. If you don't have a solid analysis and solid process and solid structure, you are continually going to be hit and miss with your trading and guessing all the time. And when the market's bearish, you're going to panic and you're going to make bad decisions on the stocks. So to me, you need to start getting that process and start working out why you want to have this stock in your portfolio. What is the portfolio you're running? What are the rules around it? How are you going to manage it? All of those things are critical for you. And again, I teach that sort of stuff in a really cheap trading mentor course. It's so dirt cheap for what you get in it. And it will help you understand things. As you heard Ian on the earlier thing, just my book for $30 is really tidying up his trading, and he will be profitable. I know doubt in my mind he's going to be very profitable this year on his trading. So, but looking at this, let's go to MYX and have a Main Pharma Group. Main's a really, really good company. It has been a little bit bearish. It's moved down through there, but it is a good looking stock, and I do like it. I do like the healthcare sector for this year. This is a little bit worrying. It's been really bearish since that high through here in August 2018 to here. It's probably a little bit early to get into the stock right now. I'd say I'd wait for it to stop falling away. It may have stopped falling away. I'd like to see it start to move up from here. It's not super exciting, but I'd put it on my watch list. Nick, I really would have this on my watch list because it is a nice company. It is looking like it's possible that it could start to move up, but it could be just doing a nice little bounce like that. And if that's the case, then we might see some nice moves. So I need to see some higher troughs and some higher peaks going through. If I can see that on that monthly chart, then I'd get a lot more excited and buy in. To me, I'd rather give money off the bottom than lose some of that possible potential to know something's moving up before I get into it, rather than jump in really early and watch it fall away on me and then I have to get stopped out. Or worse, some people ride stocks down 30, 40, 50, 60% or even more. And I was only speaking to another guy the other day. I spoke to him late last year, probably October last year, and he was losing 30% on a stock, and the stock's fallen another 55% since I spoke to him, and he knows what I told him to do, and he just pretty much decided to keep doing what he wanted to do. So it's actually keep falling away. Now, that's people. They get emotional, they get tied into the stocks and a way of thinking, but they don't look at necessarily reality. That's the emotional, I'm too tied into this, I'm too invested into this, so I can't sell. And to me, it's just money. You either buy or you sell. If it's falling, you get out. If it's going up, you stay in. Simple as that. Everything else is irrelevant. While the stock's falling in price, your money's staying in a trade that you're not making money on, and you can't be in a trade that's going up, and that's really critical. So there's opportunity cost and a whole other things around all of that. So thanks, Nick. We're looking at ORG now, another really, really good stock. ORG, really, really good stock. So I like your stock selection or what you're looking at, if that makes sense. Not necessarily what you're buying or selling right now, because I don't know that. But what you're looking at is good. This one's looking a lot better, and I do like this stock. Looking very, very nice. Look on the left-hand side, the monthly chart's looking like it's come down nicely. This is looking really, really nice here. I'd like to see 1 or 2 weeks down. If we get 1 or 2 weeks down on this stock and it starts to move up again, then that could potentially be a really, really nice buy. So again, that one's looking a lot nicer. I'd prefer that one over main Pharma right now, and CCL definitely. This would be my choice if I had to have a choice of those three, but I think you're on a winner with Origen Energy at this point in time. Energy is another sector I actually do like for this year, but again, I'd like to see 1 or 2 weeks down and then for it to start to move up again. Next one, Steve Otts is his surname, Stephen Otts. I'd love you to look at Telstra, S32 and Qantas. I can't look at all of those, so I'm going to look at Telstra. He says, thanks with Telstra on the long term. I'm more interested in his move into the 5G into 5G network with S32 was the stability of the board, new CEO and its association with BHP, its diversification, its dividend and its cash flow. With Qantas would be its domestic market. 5G is going to be a few years of heavy rollout. They're starting to do it. Vodafone's doing it. Optus is doing it. There's not even, as far as I know, there's no devices in Australia that can use 5G. So that's a long, slow burn to me. To me, the stock's either going up or down. And we're going to look at Telstra in a second. I'll just bring it up on the screen now so you can see what we're talking about there. To me, I'm not really concerned or really interested in its 5G network. I'm interested in making more money. S32, stability of the board, no, that doesn't interest me. New CEO in association with BHP. I looked at S32 a little while ago, a month or two ago. I do like the stock at this point in time, but I'm not going to look at it today. And I don't buy airlines. They're just, anything can happen with an airline, but that said, Qantas is looking a little bit better at the moment anyway. But the domestic market, if housing prices are coming right down at the banks and interest rates go up, all sorts of other things happen, then the domestic market may be better for them because less people are travelling overseas. But again, it's all speculation. Is it trading up or is it trading down? And that's really what I'm looking for. So, but thanks for those stocks, Stephen. Looking at Telstra here, you can see here how it's come down almost double bottomed with its low, or pretty much did actually. See that 260, its all-time low is 255. That's an awesome little move from there. Moved straight up, come back down, made a higher trough. And this is what I was talking a little bit about earlier. It's just making sure it stopped falling first, always first and foremost. At 260, people were saying, let's get into Telstra. It's cheap. wrong time to buy, because if it falls to 225, then it's not cheap at 260. And so that's what a lot of people do. I would rather give off all of this money on the bottom to get into a stock that I know is going up more medium term. So at this point in time, you can see here how if I put on my little tool here, it moved up from that 260. It moved up 31%. Really, really nice move. And then those people could have bought in there and, and they would have made some money, but then it was down 20%. And now it's moving up again. So after a couple of weeks down here, I still think it's going to have, this stock will probably have 1 or 2 weeks down through here and then start to moving up. At that point, I think it might be a really nice medium to longer term buy. It's paying reasonable dividends, although I believe it dropped its dividend only last week. I think it reported last week. I didn't even watch the report. I actually don't read reports. That's probably a strange thing for most of you, saying Dale doesn't read the reports. I see the outcomes on the charts, but really I'm just looking for strength of buying and selling and direction. Now, a lot of people that might watch these videos are pure fundamentalists, and some of those people think I'm pretty much crazy because I don't look into the companies. And it's really, really serious. I'm a technical analyst. That's what I do. Yes, I do use fundamentals in my trading and looking at what to buy. And what fundamentals are telling me is what good quality is. But I use a lot of different metrics than a lot of the fundamental analysts. And a lot of the fundamental people, they don't even look at charts. Whereas I'm looking at when to buy, when to sell. That's what I'm mainly concerned is, and that's what the charts will tell me. So right now, Telstra's in that very, very close of when to buy. Last one I want to look at for today was by Keung. I think, and as I said last week, hopefully I'm saying that correctly. I know I've got another stock for you on the US report, Keung, so please go over to that one as well after you watch this one. That'll be out tomorrow, that one. Hi Dale, thank you for last week's review. I have some shares in Titomic Limited, Triple T. Since a while ago, just wanted to know your opinion on Triple T. I actually don't really interesting sort of stock. I don't really know pretty much anything about it. At this stage, it looks a little bit more bullish. It is quite interesting in terms of how it's fallen away. I think it's a little bit more short-term bearish at this point in time. Looking at the chart here, it's had some resistance there around that $2.47. Be interesting to see what it does here. If it keeps going down, let me get rid of that now. If this thing starts going down here, and if that low there is broken, that $1.88 low, which at this point in time I would expect at least 1 to 2 weeks down, but I think it's probably more likely that low at $1.88 is going to be broken. If that's going to be broken, then I would suggest it's going to keep going further south at this point in time, but not 100% sure exactly what it's going to do. But would I take a new buy in this right now? No, I wouldn't. If I owned it, what would I be doing? I'd be putting a stop loss on that, matey. That's exactly what I'd be doing. I'd be using a trend line. For example, if I use my trend lines that I teach in my course, I would have exited this stock already based on that. But I don't know what buy price you had. It's your decision what you want to do. I'm not going to tell you what to do, but right now I think it looks a little bit more bearish. Short term, what it's going to do more medium term, I'm not 100% sure. But the chart will tell me when we get there. That's it for me for this week. Remember, I'm doing some beta testing for our live Wealth Within TV live film on Wednesday night, 7 to 8 p.m. I'm going to be around answering questions. Again, it won't be perfect. It'll just be testing stuff. So it's not going to be the full-blown show that I'm looking at doing. It's doing a testing, not only the streaming and everything else and the quality of that streaming that we're actually able to do. So tune in if you've got some time. I look forward to it. Now remember, you need to like that channel, so hit that like button wherever that is down below. Also subscribe to our channel so you keep up to date, so please do that, and make some comments down below and give me the stocks that you want to do and ask some questions. And you may never know if you do that today and tomorrow, then I might cover some of that on Wednesday night. So good luck, good trading. Talk to you next time.